Go live. Yes, hopefully everybody can hear me. It'll take just a moment because usually it takes a few minutes before everybody gets there. Yes, welcome. So this is basically the first pre-market analysis or pre-market trading video or live stream that I have done. So this is going to be new for me, but my idea with this is basically to show what I basically do before the market opens. So I do most of my tradings before the US session opens. So I spend most of the morning or several hours just going through the markets and checking what technically will most likely happen in the US market. So there is, of course, some movement in the market when the European market opens, and also at some point in the Asia market, there's also quite a lot of movement, but it is not compatible to what happens in the US market. There's just much more liquidity going around when the US market opens, and therefore it is more attracting to trade then. So you may think that currency or stock goes a certain way when the European market opens, and when all of a sudden the US market opens, everything changes. And therefore, I've just most of the time decide just to wait until the US market open. How does it react? Because that will really give the clear picture of where things are going. But before the US market opens, I basically run my analysis. So I pick my currencies that I want to look at. I pick the stocks that I want to look at. I pick the commodities and so on. So here I have done my list of currency pairs that I think are interesting, and also I've added also gold because well, gold hasn't completely turned around at this current stage. So I entered a gold buy yesterday, or 2 days ago it was, and today we have fallen quite drastically. We're down 1.35% in gold, and at the current stage we are testing the 40 exponential moving average. That is where we are testing. I didn't expect this to break the 20 moving average here in the middle of the Bollinger Band, but we have broken that. So at this current stage, we could fall towards the bottom of the Bollinger Band. That is quite a drastic fall, but that also means that we have to break the 200 moving average. We also have to break the 50 moving average. Furthermore, we also have to break the lower part of the Bollinger Band. And this would mean that we would fall in one day, would fall roughly 2.96%. I don't really see gold falling that far in today's session. Could be wrong, but I just don't think that it's going to happen. So what is happening here is most likely that people are flooding money into cryptocurrencies. They're just not in the usual way when you have a recession or economic downturn, putting their money into silver and gold. They're instead putting the money into cryptocurrency. So they're basically taking money out of the gold market and basically put it into cryptos. And therefore, you basically see that enormous growth in Bitcoin and Ethereum and all those cryptocurrencies, while you see gold basically fallen at this point. I think that is very, very risky. Gold has proven to be a very safe investment when it comes to economic downturns, and it will always be like that. While cryptocurrency, I think that is pure speculation at this point. But we can look at the gold, for example, because this fall could give us another opportunity basically to enter a new gold buy. And if we were to drop below the 40 exponential, then we have the 200 and the 50 moving average right underneath there. And if you look at the technical indicators as well, we have the MACD crossing the signal line. We have the RSI becoming fairly bearish at this point. We have the CCI becoming bearish, and the stochastic is also bearish at this point. So it technically looks like we're going to fall further. We put our stop loss right here at 50, so roughly down here. So there is a lot of room to the downside, and there's quite a lot of moving averages and obstacles that we basically have to go through in order to get to this level. If we get there, probably not. I would be very surprised, but at this current stage, we're falling 1.55 at this current stage, and so on. If we look at other, for example, time frames for gold, we can see that, for example, in the 4-hour chart, we have the 200 moving average here, and that should offer us enormous amount of support. But that is roughly, how far is this? This is another 0.89. That is, if we continue this fall, it is probably here where it will stop. So, yeah, that is kind of the trade for gold. So I made other trades as well today. The one was Eurocat. The reason why I entered this trade was because we ran into the 200 moving average here. I put a stop loss right underneath and a target of these the very highs here. And the reason why I put a very tight stop loss here is because if this were to turn around, if the 200 moving average would break, and that will basically open the door all the way down to the 300 moving average. So I put a very tight stop loss here in order to minimize the risk. The reason why I entered this trade as well is because we were outside of the Bollinger Band. The stochastic was basically turning around here in the 4-hour chart. It often helps to look at the 4-hour chart, 2-hour chart, or 1-hour chart in order to, in the stochastic, in order to see where we technically are going. If, for example, the 1-hour chart is still very bearish, then it's probably not a good idea to enter for a buy. But if the 1-hour chart starts to turn around, like it does here in the Eurocat, then that is a very good sign to enter the market, because that means that momentum has shifted from being bearish to be bullish. And then you can look at, for example, the 2-hour chart. It is also bullish. And then you can look at the 4-hour chart. It is also becoming bullish. And if this crosses the red line here, it is almost a guarantee that we will see that the 1-hour chart will start turning around. But it still hasn't turned around, but it will, because the other lower time frames will basically are basically predicting what will happen in the future. So I think this was a solid trade. There's a lot of resistance above here, but if we manage to break above the 50 moving average and start trading above the 20 exponential moving average, then we are heading all the way back to these very highs. And that is a very good trade. That's roughly 1.75 or over 1,000 pips. So that is a really, really good trade. So we have also found major support in this area before. Also, the 200 moving average has been quite supportive in the past. So yes, this is going to be a very exciting trade. So other trades, currencies that I've been looking at is, for example, the Great British Pound, US dollar. I was fairly late here. This was a very good trade if you entered right here. And if we entered here, then I would have a very tight stop loss right underneath, and then I would target these highs. And that is a trade of roughly 1.07%. And that is that's a very, very good trade. But it is very late. You can look at the technical indicators. We are basically on the edge of being overbought. So it is risky to enter it now. If you enter it here, then it would be a very good trade. So this is most likely not a trade that I would do now because it has gone. You can't pick up everything. So I will leave this out. Then we have the euro and Swiss franc, and we can see that we basically bottom out here. The 100 moving average is probably the bottom of this market. We have rallied above the 20 exponential moving average, and then we broke down all the way towards the 50 moving average. So if we bounce from here, then this is going to be a really interesting trade, because this means that we'll bounce and we'll head towards the previous highs here, and that's a roughly 0.72%. You can basically see the percentages here in the corner when I do my analysis. So roughly there, and that is, yes, roughly 0.7%. But that means that we have to go towards the 50 moving average and start rallying again. We can see that we are turning around here in the stochastic. It is becoming bullish. There's a lot of room to the upside, so we may surpass these previous highs. We may go even higher than that, for example, to test these highs, and that is a much better trade. But I will probably stop right here if we were to do that trade. So I will leave that open. So we have looked at this one. Then we have the US dollar, Swiss franc, and this is also a trade that I'm thinking about entering. So it's a little bit late. It rallied towards the 20 exponential moving average and then broke down below the 20 exponential moving average. At this moment, we're trading well underneath. Should have entered it here. We can see that the 20 and the 40 exponential have been very resistant in the past. And yes, if we start rallying up to this area here when the US session starts, then it is possible basically to start shorting this. The target would be these lows. The stop loss would be above the 40 exponential moving average. And the reason why I put it there is, for example, these are the previous highs, and we haven't broken the 40 exponential moving average basically all the way back here. It's before December. So it's fairly sure, I'm fairly sure that we will not break that stop loss, and it's the probability of hitting this take profit, it's fairly high, to be very honest. So I'll leave this open. Then we have the Turkish lira and the Japanese yen. So the reason why I chose this is because we're heading towards the 200 moving average. We have actually tested the 200 moving average. We got this very negative candlestick here, and now we have a red candlestick here. So usually when you have this pattern, it basically means that you will fall. We have a similar pattern here, and we fell quite from the top here to the bottom. There is roughly 2.93%. So quite a nasty fall. So if we were to fall all the way to the bottom here, that's a roughly fall of 9.05%. So a very, very good trade. But I think that the very bottom is the 50 moving average. We can see it coming here. We put out this. That is roughly from that point to the 50 moving average. That's roughly a 5% fall. So this is a possible trade. I would put the stop loss right above the 200 moving average, because if the 200 moving average breaks, then it is almost certain that this will go significantly higher, and take profit would be roughly down here at the 50 moving average. So we can see this is an area where it has been both supported and resistant. So, and it's the 50 moving average. Its basis for going down to this level is quite good. We can look at the technical indicators to see why. For example, here we crossed the Bollinger Band. We are creating this basically this pyramid shape, which usually is a very bearish shine, and we could head towards the 20 moving average, which is right here, or if that breaks to the 50 moving average. Technical indicators other, for example, RSI is very high, so it is significantly overbought and basically needs a pullback to the downside. So even though we fall towards that 20 moving average or 20 exponential moving average, that is from here to there, that's still 2.2%. So still fairly good for a good trade. Then you have the US dollar, Japanese dollar. This is a trade that we made this morning. And the reason why we did that is because we have been in this downtrend for a very long time. And the best sell that you, or the short you can make in this trade is when you get to the upper channel, then you can short, or if you go to the bottom of the channel, then you can buy. So you can see what happens when we get to the top. It breaks significantly to the downside, and when we get to the bottom, it rallies significantly to the upside. The second best trade you can do is basically when you are at the 50 moving average or just break above the 50 moving average and then you break down. So for example, we have several examples here. This one, we have it here, and every single time that it basically turns around. And at this point, I've chosen the very lows here. I don't know if that is going to be the case, but that is where I put my take profit. We could also take profit down here, but I think that is too optimistic. If we break the 20 exponential moving average here, then this will certainly go to the bottom of this chain. So this is a trade of roughly 1.11%. So also fairly good trade. It doesn't matter if you get like 10% profit of every trade. Sometimes you get lucky, like looking for gold. Sometimes you find a big nugget, and yes, that is fantastic. But most of the time, it is the small nuggets, the small trades that are 2, 3, 3.5%. Several of those, that is where your major profit comes from. So I tend to close my trades if I get a profit of roughly 3.5%. I'll take that every single day. Many trades of 3.5%, that's quite a big profit in the long run. So you don't have to focus on the 10% profit trades all the time. It's also the small trades, many of those that will become a lot of money in the long run. So I'm pretty sure of this trade. This will most likely go down. If you look at the Bollinger Band here, we were way outside, and usually when we get outside in this case, you can go all the way back here. Every time we get to the top, we break down towards the bottom of the Bollinger Band. The stochastic is still bullish. The RSI is bearish. We are still bearish here in the MACD, and the CCI is basically flat at this point. If you look at the 1 hour chart, for example, for this is the reason why I started selling, because the 1 hour chart started turning around. It has also gone over to the 2 hour chart. It is also bearish. The 4 hour chart is also bearish. And this basically means that we will have in the next probably 8 to 12 hours bearish momentum to the downside. And that will start affecting the daily chart, for example. This will most likely go towards the green here, something similar to this, and then it will turn around and head back to the bottom. So this is one of the trades we did in the morning, and I'm just going to hold on it for probably a day or two. Then we have the euro US dollar. So the 20 exponential has been very supportive here. It is also fairly late to enter this. We should have basically entered it here. I was thinking about it. I actually put out the signal and did not press. I should have pressed this, but yes, if it falls back down, it usually pulls back when the US session opens, or half an hour before the US session opens. So that is around 10 minutes. So you'll see whether or not this changes. So if it pulls back here, then it is basically a buy. Then we have the Canadian yen. So this is also a trade that it is more of a risky trade. And the reason for that is because we are in technically an uptrend, but we have tested this level here quite often. Back here, almost here, and we are on the edge of testing it again. So here we had this massive rally and then broke down significantly to the downside. Right here, that is roughly a move of 2.3%. So I don't think that this is going to happen again. Usually when it goes this far to the very highs, it has a pullback towards the 20 moving average. And that's what I expect to happen here. And I like making these trades because if you look at the Bollinger Band, we are very, very overstretched. It is very likely at this point that we will go from this all the way down to the 20. So that is a move of minus 1.1%. And that is also a fairly good trade to do. So this is something I'm thinking about basically entering. So yes. So if you look at gold, gold has pulled back. We are trading now at 1888. If you look at the 1 hour chart, we'll probably see that it is, nope, we can go to the half-hour chart, still bearish. So when this starts turning around, this will probably start rallying. If you look at the other charts here, we can see that, yes, we're probably not out of the woods yet. No, there's probably some room to the downside still. So momentum is still to the downside. We are having a little bit of pullback. That's probably because the US session opens in half an hour and it usually pulls back from its, if it falls or if it increases. But yes, we're still far away from the stop loss. So another trade is here. That is the US and Mexico Peso. So we have been in this downtrend for a very long time now, for ever since back here. That is basically in, where is this? This is back in April. We have been in this downtrend and the 50 moving average has been enormous resistant. So every time we get to that point, it basically breaks down. So we have been really choppy back and forward. It has been difficult to basically enter this. I thought we were going to go a little bit higher, something similar to this, probably not that high, but above the 50 moving average, somewhere here. And then you could basically enter this for a sell. So if I enter this, I will have a stop loss right around this area because these are the previous highs here. And then I will target these lows. So this is roughly a trade of a 2 to 1. So one risk to the upside, to the benefit to twice to the downside. But it is not ready yet to enter. We are too low. We're basically in the middle of these take profit and stop loss. And last one is basically USR. So this is the trade that I closed. Maybe I closed it this early, but the reason why I'm basically showing this is because I want to explain why I closed this trade. And usually when we have this enormous increase like this, it tends to fall towards the middle and then it starts rallying again. So I'm not completely certain that we are going back to where these very lows. I just know that when we have increases like this, you can make a short here and basically take profit around this area. That is also a fairly good trade. So we did quite well. We were up, I think it was around 3-5% or something like that. But this is still a trade that could go all the way down towards this level here. It could. But the reason why I left it was the 4-hour chart. So we can see it here. So we have this rally and then we broke down, and usually what happens is that you find resistance here in the 20 exponential moving average in the 4-hour chart. And that is what we are seeing here. So we had this rally, we had a breakdown, and if we don't break through the 20 exponential moving average, if we find support here, that is a sign that this is probably going to pull back. We are also finding support otherwise in, for example, this is a 15 chart. We can see that the 200 moving average in the 15-minute chart has been supportive. And as long as that is the case, we will probably rally from here and go even further. So it helps to look at the other time frames in order to see when to basically leave a trade, even though you have made a take profit. Usually, just if you're satisfied with your profit, just close your trade. So we can look at the stocks. So I always do my conditions. First of all, I do my easy scan. I go into conditions, and then I look for trades that are above or crossing the or outside of the Bollinger Band. Sorry, I was about to say. So crossing up through the BB bottom. So what that means, this is a program scan which will focus on all stocks that are crossing, have been crossed downside of the Bollinger Band, some that were here, and is now crossing above the bottom of the Bollinger Band. So let's see. We may not find anything, but if we do find something, then there are pretty valuable stocks that you can basically trade. So you can see that there are quite a lot of them. So we can look at this. We can see that we were outside. We rallied yesterday. This most likely will continue this rally. So it doesn't really matter what the stock is and so on. This is a DNLI. This is looking fairly good. It's supportive here in the 50 moving average. We probably pull back towards the 50, but the 50 is basically resistant at this point. So what I do is basically I write all of these stocks down. So I see what happens when the market opens, whether or not this is going to have a major pullback or not. The best thing that could happen here is basically the pullback towards the 50 moving average, and then if that holds yet again, then it's a very good time to buy it. You can then put a stop loss right underneath here, probably a little bit below the very lows here, and then you can focus on the top. So this is a trade of roughly 37%, so an enormous profit if that goes that way. So we can look at the next one. This is probably not a very good one. This is too much resistant above. We can look at this one. This is okay, but also quite a lot of resistance above. We have here, we were outside of the Bollinger Band, and then we are turning around. So this could be a plausible trade. This is FSLY, so we'll check that one. So this one and that one, that is flagged as plausible buy-ins. Then we have this one. This is not a very good trade. You can see that we crossed here. If we wanted to enter there, we should have entered it down here, and we would target the top of the Bollinger Band, but we are already nearly there. So when we reach the top of the Bollinger Band, we'll basically have a pullback. So not a good one to look for. Then we have this one. This is looking very promising. So this is AVLR, and I will just put a flag right there, because the reason why I think this one is good is because it has hit the 100 moving average. So the green line here is the 100 moving average, and it was in the past significant support, and it has shown to be significant support yet again. We have traded a fairly amount above, but when considering last time we were down here and we rallied all the way up to this is roughly 59% rally the last time we hit the 100 moving average, then this is probably a trade that you could consider. We were outside of the Bollinger Band, we rallied, and in first case, the 20 moving average could be a target. That's roughly 6.4%, or the top of the Bollinger Band, and that is a trade of 17.22%. So yes, this is a very plausible trade. The momentum is to the upside. If you look at the daily chart, it is turning around here. The CCI is turning around, so there's a lot of room to the upside. And also the MACD, it is very bearish at this point, but that is the reason why we fell this significantly. It has fallen all the way to the 100 moving average, roughly 18.4%. And now it's starting to rally again. So yes, I would consider that as a plausible trade. Then we can look at this. This is also APBN. So yeah, probably. Probably not a lot of room to the upside. You can see that we were here for a really long time, and this is probably an outlier. This rally here. So in best case scenario, we'll go to these highs. That's roughly 13%. Yes, I didn't know this too. The numbers. Yes, that is probably a really good trade. Sorry. So we're outside of the Bollinger Band here. We are rallying. We could go towards the middle. That is roughly 4%. Or the very highs here. That's 13%. So yes, this is also considered to be a fairly good trade. I would still wait for a pullback towards the 20. The technical indicators here are not as good as they were for the other stock that we were looking for. So yes, we'll just put this on our list as well. So DHI, this rally has probably already gone. If we entered here, we would have received 7%. So it is very unlikely that we'll continue another rally of 7% today. Then we're going to look at the SMAR. We are finding support here at the 40 exponential moving average, and we are rallying. We are also outside of the Bollinger Band here. So this could go towards the middle of the Bollinger Band. That's a trade of roughly 5%. Or the top of the Bollinger Band. That is a trade of roughly 12.13%. So yes, this is also a plausible stock to start buying into. So this is basically what I do every single day before the market opens. It's basically looking through all the different stocks that are interesting. Sometimes there are a lot of them. For example, here are 30 stocks, and we just looked at 8 out of the 30 stocks, and yes, that is basically what I do. So sometimes you just have like 2 stocks, and yes, therefore I don't make that many trades on that day. And it doesn't really mean that I will look at all of these stocks or trade all of these stocks when the market opens. Maybe 1, maybe 2, maybe none of them, because some of them could go completely in a different direction. So we can go over to eToro, because probably with TC2000 is fantastic for stocks, fantastic for example, precious metals, and for currencies and so on, but it does not trade commodities. So we can go look at some of the commodity trades that example, gold was here. So yes. Yes. So this is the gold rate. We need to go to, we just have this up. So I do my curve. So what I do also in the virtual, I use the virtual all the time. For example, in eToro, I think it's extremely helpful, especially if you want to test out different methods. So I put several stocks. Usually I just spent, you get, I think it's like $100,000, and then I just have it completely fixed that every time I make a trade, I use $1,000. So I don't focus on the percentage of portfolio. That is the amount that I use. And then I look what basically works and what doesn't work. So for example, the gold trade that I did 2 days ago, at the current moment, I invested 1,000. I use my specific leverage, and this trade at the current moment is down 4.32%, 7%. But it is very encouraging sign that we are finding the support here at the middle of the Bollinger Band. That is quite good sign. We can look at the 4-hour chart, for example, also here. We are way outside of the 4-hour chart. That basically means that there's too much selling occurring, and we are probably going to rally up towards the 50 moving average. That is at 1909, so that's a very encouraging sign. But that probably won't occur until a few hours from now. You can look at the 1-hour chart here. You can see that this, in the 1-hour chart, the CCI is turning around. It needs to cross 0 in order to gain momentum to the upside. So in the 1-hour chart, the 20 exponential moving average has acted as resistant. But if we rally up towards that area and it looks like there is no way that we are going to break that, I will probably leave the trade, because that means that we don't have enormous loss on it or any loss whatsoever, and then we can enter the trade for another time. But we'll see what basically happens. At the moment, in the 1-hour chart, it looks like we are going to see a rally up towards 1900. So at the moment we're trading at 1889. So let's go to the proper window. Yes, it's here. So we can do this and this, and now I thought we could probably get if you have any questions, if there are any commodities or trades or something like that that you basically want us or me to basically look at. You can just write it in the chat in the live stream. No? Okay. Yes, so it is, I can also show you how you basically can do other trades, not just in the daily chart, but also in other charts. So in that case, you have to have a little bit more leverage if you are going to trade in lower time frames. Otherwise, it won't really make any sense. If you are trading in the daily chart, then you're looking movements like this, and therefore you can also have lower leverage when you make those trades. But if you look at, for example, this is cocoa, and we can go to the 4-hour chart, then we can see in the 4-hour chart that we are running into resistant here at the 50 moving average. So we know here that the 200 moving average, or roughly this, is the bottom in the 4-hour chart, and this is one of the tops of the 4-hour chart, or the resistant areas in the 4-hour chart. So in this case, you could basically make a trade here, put a stop loss right up above the 50 moving average, and then a take profit down around this area here. So that is a plausible trade. So you don't have to look just at the daily chart. You can also look at the 4-hour chart. It is also possible to look at the 1-hour chart, and every single time frame you can basically do a similar trade. So you could, in theory, just look at one specific commodity, currency, or so on, and just look at different time frames. But for example, in order to get any amount of profit in a 1-hour chart, you have to have significantly high leverage, for example. So here, for example, in the 1-hour chart, you can basically see straight away that we have a Fibonacci retracement from the top here to the bottom. And the reason why we found resistant right here is because this is the 50. And that basically means that every time we get to that area, we can basically start selling. So this was a possible sell, and the target, we could have put a stop loss right above the 50 Fibonacci retracement and a target roughly down here. And then you would look at the lower time frames for when this basically would turn around. So because this is only a fraction of what we usually trade, you technically need to have quite high leverage in order to get any amount of profit out of this. But the same rules apply for the lower time frames as for the daily time frames. So we can look at, for example, Bitcoin. So when we look at the daily chart, and as you can see, we're trading at 41,118. We need to look at the Bollinger Band in order to grasp what is basically happening here. And at this current stage, we have been overstretched several times. I was expecting a move similar to this way back, but it hasn't occurred yet. So it will occur, but it hasn't yet. So if we see a move similar to this one, we will probably fall all the way down to 35,500, roughly, give or take that area. If you look at the 4-hour chart for Bitcoin, it looks something similar to this. So here in the 4-hour chart, you could make a trade right now with a stop loss of roughly 42,144 and a take profit of around here. That's 36,000 or 47,000, because it usually has, in the 4-hour chart, has been the 20 exponential moving average has been acting as support, and we are getting overstretched now, and we could basically expect a pullback in the 4-hour chart towards the 37,000 level. So that is the 4-hour chart. In the 1-hour chart, you can see that we are also overstretched outside of the Bollinger Band, and we could expect a fallback towards the middle here, and that's roughly within the hour, a fall from 41,100 to 39,500, give or take. That is very possible. So every time it has basically in the 1-hour chart gone outside of the Bollinger Band, it has pulled back towards the middle of the Bollinger Band or towards the 50 moving average. So in worst case scenario, we'll go all the way from 41,560 down to the 50 moving average. That is roughly 37,700. That is basically the support in the 4-hour chart. FCELP. Yeah, I'll have a look. Okay. Well, there's not a lot of data for this. I think it's a stock. But what I can say at the moment, we are very overstretched. Last time we were this overstretched, you can basically see it here. We fell from 13.9 all the way down towards the middle. So in daily chart, at least, the 20 exponential moving average has been the low point in this. It's basically supportive in this market. So I would look at the CCI, for example. We were up 231 when we started breaking down the last time. At this current stage, we're at 167. So this could rally even further. But if we get close to these previous CCI numbers, then expect this to fall. We are outside of the Bollinger Band, and last time we were outside of the Bollinger Band, it fell quite significantly. So roughly 33%. So yes, that's quite volatile. We can look at the 4-hour chart. There's more data there. We can see that this is the last fall. No, it's not the last fall. Yes, it was the last fall. So it went from 13.85% and fell all the way towards the middle of the Bollinger Band. That seems to be the case now as well. So it looks like we are going to, this has been the top, 15.51, and now we're heading back towards the middle of the Bollinger Band. So what I would do in this case, I would put a stop loss roughly here. So that's 1577, give or take. And then I would put a take profit here at the 20 exponential moving average. So that is the trade I would do in this case. So it is not very likely that we'll go to these levels at this current point because the technical indicators are turning around. We are significantly overbought, and the 50 at the middle of the Bollinger Band has been where it has fallen in the 4-hour chart previously. So just to make sure that you hit your take profit, you just have it a little bit above this historical support area. So this is a drop of roughly, at this point, 14.49 all the way down to 12.16. So that's a fairly good trade. And it looks like that is what is going to occur in this case. So I don't know if you had a buy or a sell. This is definitely, at this current point, a sell and not a buy. If you wanted to buy this, you should wait until we get to this level, and then you could basically start buying it again. Or if it starts breaking all the way to the 50, then you could start buying this again. Yes, any other questions? Dow Jones. You can just write in the chat in the live stream, or you can write here. Dow Jones. So we have to go to the daily chart first. So the thing with the indices, I have not entered any of the indices, neither the Dow Jones, the S&P 500, or the Nasdaq, or any of the European indices. For example, the DAX it has potential for a very massive fall, but I don't like shorting indices because they are basically made in order to go up, for example. So I nearly always buy them. So I wait for them to fall. So the Dow Jones at this current stage is very, very likely to fall. We are very overstretched at this point. So a fallback towards the middle of the Bollinger Band, that's roughly 30,000, 30,300, 400, give or take. That is most likely where we are going to head. Whether or not that will occur today, that is maybe that will happen. But most indices, when we get outside of the Bollinger Band, they tend to react very aggressively to the upside or to the downside. You can just look historically what has happened when we are outside, and that is a very good indication of where we are basically going. You can see it here. We fell all the way down to the 50. Here we to 50. Here we went to the 20. Here we went all the way down to the 200. Here to the 200. Here we went to the 20, and now we're most likely go to the 20 or to the 50. I don't think that we're going to see these massive moves to the downside anytime soon. And the reason for that is because there is going to be a lot of stimulus going forward. Democrats are very in favor of doing stimulus packages and so on, and they have full control of the U.S. government. So I wouldn't, but pullbacks towards the 20 and the 50, that is probably what's going to be most common. So in this case, I would wait until we get to the 20 exponential moving average. I would put a stop loss. If it turns around, I would put a stop loss right underneath the 20 exponential moving average, and then I would target these previous highs again, roughly here. So that's a move of 30,300 to roughly 31,300. So around 900 to 1,000 points. So we should also see this downfall in, for example, the lower charts. You can see it here. We will first go this way and head towards the 20 exponential. That's roughly 30,800, 900. Probably see it better in the 1 hour chart. Yes. No, it did not show it much better. No, it did not show it much better. So it'll probably not occur today. But definitely do not buy it here. Wait until it pulls back towards the middle. That is most likely what is going to happen. Yes, any other? I hope I answered your question. Yes, that is possible. That actually would be quite interesting. Yes, I will consider that, and I'm answering whether or not I should make videos for trades that I opened and trades that I closed. Yes, I could do that. My idea with the channel is basically I will slowly grow with time. So at the moment I'm adding, for example, more cryptocurrencies because people are basically most of the questions that I'm getting is about cryptocurrencies. That's what people are interested in, and that's why I basically just added one cryptocurrency the last few videos, and I'll probably do around 5 cryptocurrency every day. So after that, I'll think about other things that I can add to the channel. But I will write that down. So it's 5 minutes to the U.S. stock market opens, and yes, I will put out the signals for those trades that I've been looking at. Also, for these videos, I will make a list of all the stocks, indices, and so on that I'm going to look at. So it will basically be easier to follow and so on. Yes. Fine. Yes. Good. And yes, that's about it. So good luck and thank you very much.